the Excel spreadsheet. All right, so we've already done the startup costs for the first month. We've done the revenue projections on the second tab, and it automatically pre-populates the income received on the cash flow statement. Now we will look at the amount of money that we spend on each of the monthly costs. All right, we'll use the um, exact same expenses, but instead of the startup costs, we're going to go ahead and use the money for our monthly or overhead fixed costs and variable costs. So when we've done the startup costs, we figured out how much we were going to charge or how much it was going to cost us. We estimated, and we can estimate big or we can estimate conservative. Conservative means as low as possible and still get our job done. So let's take a look. So we've already done all of the training, and that was all done prior to our getting our home licensed. So in actuality, we probably will not have a lot of training expenses for ourselves. We may have training expenses for our future employees, but right now we don't have any employees. So training expenses in month one is going to be 0. We've already done the entity registration, so we won't have to pay for that again in month one. Improvements and equipment costs, we will not have to pay those because those were all done in the startup phase. So now we get to food costs. In our startup phase, we put $600 in food costs here to cover our 3 days of food and water for emergency, and then things like spices and any of the stuff that you may need in order to first stock your home for just generalized food supplies. So going back to how much we spend on food, you can be as detailed as you want to be. If you follow in the manual on module 3, it will literally go through how to estimate food costs. And that means, in it says how much a cost of a half a banana is, and how much 6 ounces of milk are, and how many portions each resident eats on a regular day. And it estimates that way. What I recommend is just going through and deciding how much you are going to spend on your residence. So when we first started, we were spending about $225, $250 per day per resident, or not per day, but per month per resident when we were buying food for our residents. Again, our residents are 5 good-sized adults that are developmental disabled, and they all work, so they eat a lot, and they all have healthy appetites, and so we take all of that into consideration. Now it's 2024. Since COVID, our expenses have gone up a lot. And so currently we spend about $300 average for each resident per month. So that's the figure that I'm going to use. You can decide how much you think it would cost for each of your residents. So you want to aggregate. When we have 5 residents, we're spending about $1,500 per month just on groceries. That does not include any other supplies like paper goods or anything like that. So I'm going to estimate that for one resident, and we have one resident in month one, we're going to spend $300 on food costs. Now we get into advertising. Advertising is very important because that is how we are going to fill our adult family home. I am of the firm belief that I would rather spend money on marketing and advertising rather than spending a large amount of money on what is called placement fees. So if you use a placement agency to fill your home, you are going to be spending anywhere from 100 to 125% of how much revenue that person, how much you charge them every month in order to receive one resident. So if you had one resident that was paying you $5,000, you would have to turn around and pay anywhere from $6,000 to $6,250 to cover that 100 to 125%. So I would rather take that $6,000, spend that money in marketing and spread it out over the year rather than um, do placement fees every time in order to get a resident. So in the startup phase, we spent $1,000 on marketing. That was getting business cards, brochures, uh, yard sign, different things like that created. So again, now I am going to spend that on advertising or marketing for our adult family home. I want to aggressively go out and get 5 residents, and we planned it to where we had I should say 6 residents, all 6 of our residents within 5 months. So to do that, we're going to have to spend a lot of money. And currently, the best place to spend money online is to do what's called Google Ads or Facebook ads or anything that online would drive traffic to your website so that you would have the ability to get them in for a home tour and have them view your home so that you could get residents as quickly as possible. So I'm going to say that we're going to go ahead and spend $1,000 in month 1 in order to drive traffic to our website and convert. So now our next line item is liability insurance. So our liability insurance, as you know, all adult family homes need those insurance policies. That's professional liability insurance as well as business liability insurance. We determined during the startup phase that it was going to take about $3,600 in order to get that done for 1 year. So instead of every year including $3,600 into the budget, what I want to do is I want to set money aside every month, put that into a savings account so that next year when I need to spend that money, I am able to turn around and pay it out of that savings account. So what I recommend is all businesses have one checking account for your business and 3 savings accounts. The first savings account is your miscellaneous and other account. That means that anything that you typically would put into a miscellaneous or things for emergencies in the future, we'd put that into savings account number 1. The second one would be any non-monthly expenses, things that happen once a quarter, once every 6 months, or once a year. I want to break that payment up and put that money in savings account number 2 so that next year, when it's time to renew our liability insurance, we have that money in savings and it will not affect our monthly budget. And then the third account, the third savings account, would be things that we would have to pay to the government or taxes. So anytime we set aside money to pay our income tax, we would put it in savings account number 3. If you have employees, you're going to have to do deductions. You're going to have to set money aside for that. You're going to have to pay liability, or not liability, but L&I, which is workman's comp. You're going to have to pay unemployment insurance. You're going to have to pay things like, what's it called? The Family and Medical Leave Act. You're going to end up deducting money from your employees so that you can pay the premium on their behalf for certain things. And you're also going to have to pay other expenses in regards to employees. So in that case, I set aside savings account number 3 for those types of expenses. One of the biggest things that people get in trouble for is when they go to pay all of the money to the IRS or the Department of Revenue, they do not have that money available. So by setting aside money on a monthly basis in savings account number 3, that will allow you to make those payments without impacting your budget. All right. So in this case, our expense is $3,600 a month. Divide that by 12. So we're going to go ahead and put $300 every month into savings account number three, or savings account number two, those non-monthly expenses. So now we get into professional services. Again, these are an attorney, bookkeeper, CPA for filing taxes, anything like that. So what in my business, I expect that I'm going to use a bookkeeper every quarter to file my quarterly taxes and upload and pay the information that I need to the state of Washington and to IRS. So in this case, every 3 months, I am going to incur an expense of probably 3 hours worth of bookkeeper's time. I'm going to just assume that it is going to be $100 an hour. So I'm going to set aside $300 and put it into savings account number two every third month. So in this month, I'm not going to put anything. So I'm going to leave that blank. Now we get into office supplies. These are going to be the consumables like ink or pens, paper, anything like that. So I'm going to just do something similar or something simple, I guess, and just have $50 a month uh, for those office supplies. Now we get down to the website. Like I mentioned, when we did the startup phase, we went ahead and spent $1,000 on the startup or the website build. Now, this is money that's going to be used to pay web hosting, also maintenance on the website, make sure it doesn't get hacked or anything like that, updates to the website if we need to do it. So I'm going to estimate that it's probably going to be about $50, which is fairly standard. It might be a little higher, it might be a little lower, depending upon how you did your website and who you hired, things like that. Now we get down to repair and maintenance. Again, this is one of those miscellaneous slash other accounts. So this is money that we're going to deposit into savings account number one in case something does come up. And so in this case, I'm going to go ahead and put $150 per month in that repair and maintenance account so that it just builds up an amount in savings account number one in the event that something that we need to do something or pay for something. The next is supplies. These again are things like linen, towels, paper goods, trash bags, cleaning products, cleaning supplies, things like that. So I figure that $100 a month for those types of supplies uh, would be just fine. Now we get into travel. This is going to be travel, gas, things like that. If you go on any road trips, if you go to any conferences, things like that. So I'm imagining that every month I'm going to spend about $150 a month or $200 a month. Let's go with $200 a month in gas just to cover ourselves. Now, the next one is subscriptions. Again, just like we talked about when we were doing the startup, the subscriptions would be anything that you have to pay, like magazine subscriptions or anything like that, newspaper if you want to have a newspaper. Also, things like online streaming channels like Netflix or Hulu or any of those. I'm going to go ahead and just continue with $20 a month. That way we're covered. Now we get into the business phone. Again, when we were in the startup phase, we decided we're just going to buy an inexpensive smartphone, have an account labeled specifically for the adult family home. And so we just either added it as another line on our phone bill, or we went ahead and went with something like Cricket or Patriot Mobile or one of the off-brand mobile companies. And so typically they're about $30 a month. So we'll just do that. Now we get down into the AFH license renewal, the business license. These are going to be renewals that we're going to be making on an annual basis. So typically the licenses that we're going to renew is the AFH license is paid as what's called a bed fee. So every bed that we are licensed for, that's the number of beds that you're licensed for on your license. In our case, we're licensed for 5 beds. Most of them are licensed for 6. So it's typically $225 or $250 per bed per year that we pay to renew our license. We're also going to be renewing our business license, the master business license. We're going to be renewing our LLC every year, filing our annual report. Also, your home care aid license for yourself, and you're probably going to end up paying it for your employees. So whatever you feel like your re relight or renewals are going to be, that's what you're going to be putting down here. I figure that $175, $200 would work. So if we put $175 a month times 12, that equals how much? $2,100. We should be able to get all of our all of our licenses renewed for $2,100. Again, we are going to be putting that information or that dollar figure every month. We're going to be putting that into savings account number 2, which is any expense that is non-monthly. All right. Next is a loan payment. Remember, when we started our business, we had $20,000 cash and we borrowed $30,000. So we decided that the $30,000, the monthly payment's gonna, let's just use an average of $600 for that. And that will be for 5 years. That will also include interest. Now we get into the association fees. Remember, that is the Adult Family Home Admin or the Adult Family Home Council. And there's a lot of benefits to that. And that charge is $50 a month. In month 1, we only have 1 resident. So in that situation, we're going to be able to run it with just you and a spouse. So let's just say there's 2 of you doing this. So you're going to be able to take care of 1 resident. So we're not going to hire anybody. So if we don't hire anybody, so there's no staff wages, therefore there's not going to be any staff overhead. So that would be 0 as well. Typically, that is going to be 30% of however much we pay to our caregivers. All right. Now we get back into utilities. We determined that we were going to be spending probably anywhere between $300 and $400 a month for utilities. That would be one of those that would increase or decrease depending upon how many residents we have. Typically the only thing that would increase very much would be probably like the amount of water that you use and the garbage. That's really all I can see as something that varies. So on the utilities, I'm going to just go ahead and use the monthly $300 that we had determined in the startup phase. The next is placement fees. Again, we're going to take the money that we might have spent in placement fees, divide that into a monthly amount and spend that on advertising. So we're not going to have a placement fee. Also, under estimating business taxes for your adult family home, we do not know how much our taxes are going to be. So we're going to go ahead and leave that 0 for right now. And then as we go and progress, we'll determine if we're going to be making any money. And if we make money, then we would have to start depositing money in savings account number 3 for estimated business taxes for our business. Now we get into the mortgage. We had determined that our mortgage was going to be $4,000 per month. The startup phase was 3 months of mortgage. So $4,000 per month on mortgage. And then again, this is miscellaneous account number 1. We're going to go ahead and leave that amount at $250 that we put in that account every month just to cover in the event of something going wrong. An appliance breaks, your roof leaks, anything like that, even if your car broke, something like that. So now our total expenses in the first month is $7,575. So we had, at the beginning of the month, we had from ending cash $5,630 as our ending cash in the startup phase. Our income received was $4,533. That was the income we received from one resident. We do not add any other cash in, so that leaves us with the total amount of cash in for month one of $4,533. We take that figure and we add it to the beginning cash, leaving us $10,163 cash available at the beginning of month one. We now subtract $7,575 from that $10,163, leaving us $2,588 at the end of month one. So again, the first couple of months, we're not going to take any owner's draw. We have saved personally to cover our personal expenses while we get our business started. So our ending cash in month one is $2,588, all right? Because our cash available minus owner's draw of 0 leaves us $2,588. Ending cash from month one is the beginning cash for month two. Remember, always the ending cash from one month is the beginning cash for the next. All right. Now in month two, we bring on one additional resident. So our income is $10,033. We do not have any other cash in. So we have, again, our total cash in of only $10,033. We add that to the $2,588, leaving us $12,622. All right. Now we go through and do the exact same thing for month two. So our food costs, because we now have two residents, our food cost is going to be $600. Our advertising, we're going to go ahead and continue to spend so that we can get our house full quickly. So we're going to go ahead and spend another $1,000 in month two. Our liability insurance is the same. That's $300 for that we are putting in every month for our into our non-monthly expenses. So we're going to go ahead and take that dollar figure and spend that all the way through the end of the year. In order to do that, if you click on month one and then just drag over until you get under month 12, and then you hold the control and the R key down and press that, that will extend that figure all the way over to the end of where that is highlighted. So that way we don't have to fill those out individually. Professional services for month two, again, we don't have any. Again, we're doing that only quarterly, so we'll skip that month. Now we get into office supplies, website repair, maintenance, supplies, travel, subscription, all the way down until association fees. We're going to go ahead and do the exact same thing by holding that down and dragging it over to month 12. And we can Control plus R, that will automatically populate it for the rest of the year, because those amounts are going to stay pretty standard. That way it enables us to fill out this Excel spreadsheet without filling each one of those out individually. Now we get down to association fees, same thing. We're going to be paying that every month. All right, I should have done that with the big one. Now we get to staff wages on month two. We only have two residents on month two, and we have two caregivers, you and your spouse. So therefore we feel that we don't need to hire a new staff person. So we'll leave that blank in month two. We also will leave the staff overhead blank in month two. Now we have the utilities, the mortgage, and other. So we're going to go ahead and highlight those and extend those all the way out to month 12. All right. So in month 2, we also are not going to do a placement fee. And again, we don't know if we're going to have any business taxes yet. So we're going to leave that blank. We already expanded the mortgage all the way through the rest of the year and the other all the way through the rest of the year. So we have at month 2, our cash available at the beginning was $12,622. And we subtract the total expenses for the month of $7,875. We subtract that from the cash available of $12,000, leaving us $4,747 cash available. We do not have any owner's draw, so our ending cash is $4,747. Ending cash from month 2 is the beginning cash for month 3. We bring on one additional resident, so now we have 3. So our cash available at the beginning of month 3 is $19,674. Now we can go through and put in the added costs for month 3. Now we have 3 residents, so 3 times 300 for food is $900 in food cost. Our advertising, we have 3 of our beds full. We only need 3 more. So we're going to go ahead and lower our advertising expenses. So I'm going to only spend $700 in advertising expenses. You can spend more if you want, or a little bit less, whatever you estimate. Month 3 is our 3rd month, so now we are going to have quarterly taxes that are due. Again, I figured that it's going to be about 3 hours of our bookkeeper's time. 3 times 100 is going to be $300 that we're going to be paying our bookkeeper every 3rd month. So we have 2 empties, 1 300. So we'll just go ahead and move that all the way across the rest of the calendar year. So 2 blank, 3 in December. All right. So that fills that. All of the rest of the expenses automatically go through. We can adjust our office supplies and our regular supplies if we need to. I'm going to go ahead and say that our regular supplies are going to go up for a couple of months. And then when we have a full house, we're going to increase it all the way up to 200. And so we'll spread that out. Okay. Our travel shouldn't be going up or down too much. Our subscriptions, phone should stay the same. Business license should stay the same. Loan payment and association fees stay the same. Now we get down to staff wages. We have 3 residents and no staff. All right. We have 2 of us taking care of those 3 residents. So we're going to be good for this month. So let's go ahead and leave that empty again. Placement fees, business taxes aren't going to go up. Our utilities should stay the same right now. Mortgage and other will go up, or stay the same, I should say. So our total expenses for month 3 is $8,175. We subtract that from $19,674, leaving us cash available at the end of month 3 of $11,499. So $11,499, I think that we can start taking some owner's draw to start paying our personal bills. So this month we're just going to take $3,000 just because we're not full strength yet as far as the number of residents that we have on hand. But soon we'll be able to start taking the full amount. So our ending cash is $11,499 minus the $3,000 that we take out for owner's draw, leaving us owner's cash of $8,400 $199. Ending cash in month 3 is beginning cash in month 4 of $84.99. Now we have 2 additional residents. We bring in 2 residents in month 4. So now we're at a total of 5. So 5 residents, our income is $28,145. We add that to the $84.99, leaving us $36,644. We now have 5 residents. 5 times 300 is $1,500 for food costs. Our advertising, we only have 1 resident's bed left to fill, so we're going to go ahead and lower that down to about $300 for our marketing. Because we have 5 residents, we only need 1 more. This marketing that we spent back here is going to continue to work for a little while, even though we're not running any more specific ads or anything like that. So we'll just leave it there. We've already figured out all of the regular expenses, office supplies, website, all of those fees are going to stay the same, all the way down to the association fees. Now we have 5 residents, and the last 2 residents are going to be quite going to need a lot of help, right? So now we're going to start to hire somebody. So in order to be competitive, what you need to do is go out to see what other home care aides are being paid. So you can go to any of the online employment websites like Indeed or any of those types of monster.com type to figure out how much you're going to have to pay. Typically right around now, $20, $22 a month or per hour is really what's going to be needed in order to attract and retain employees. Okay. So we're going to hire 1 full-time caregiver at $20 an hour. Okay. So if we open up a calculator, let me see. So we open up a calculator and we have $20 an hour is how much we're going to pay a caregiver. A full-time job for a caregiver, meaning 40 hours a week in a standard month equals 172 hours, 20 times 172 hours in a month gives us $3,440 for a base salary. All right. So let's round that up to $3,500 base salary. And again, this isn't, we're paying a caregiver X amount for a 24-hour shift or anything like this. This is just a caregiver that comes to the house full time and works 40 hours a week at $20 an hour. So our expenses are, we are going to use $3,500 as the base wage. So $3,500 for 1 caregiver. Our overhead tax is going to be 30% of that $3,500. In order to figure out how much that is, you can manually edit it, or you can do by you can use the cell formulas. So you're going to take 3,500 or this cell, which is cell G27, and we're going to multiply that by 1.3, which means that it's 130%, or just 0.3, I should say, which gives us 30% of $3,500, which is $1,050. All right. So that means that 1 caregiver is going to cost us $4,550 a month with our overhead, meaning tax, unemployment insurance, disability insurance, things like that. Okay. So now our utilities, we have 5 utilities, so we're probably going to be doing a lot more washing. We're going to probably be doing, more showers, things like that. So let's figure that our utilities are going to raise. So we'll raise that up to $400 for the rest of the year as far as utilities go. We're not going to have any placement fees, but we probably are going to want to start putting tax money away in savings account number 3. So again, because we don't really know how much tax we are going to have to pay, let's just go ahead and start putting, I don't know, let's say $400 this first month, because this is showing that we're going to be making a good amount of money. So with our expenses are now $13,175. We subtract that from our cash available at the beginning of month 4 of $36,644, leaving us $23,000, $23,469 cash available at the end of month 4. So now we get to owner's draw. This month we're going to take $5,000, and then subsequent to this, we'll raise the amount of money that we have in short order so that we can take a pretty good amount out to pay our personal bills. So our ending cash in month 4 is $18,469. So the ending cash in month 4 is the beginning cash in month 5. We bring in our last resident in month 5. So our income is going to be $37,148. We add that 37,145, I should say, to the 18,469, giving us cash available at the beginning of month 5 of 55,614. Our food costs are now going to be 300 times 6, which is $1,800. We'll go ahead and extend that all through the rest of the year. Our advertising, the one thing about advertising, you're going to want to have a consistent amount of spending in advertising. So let's just say we're going to spend $250 every month just for redoing business cards, paying for just exposure online, different things like that. Because if you totally turn off your marketing, it's going to take you a lot longer to start additional marketing so that you can catch up. By spending a small amount of money on marketing for the remainder of the year, what that's going to do is that's still going to drive traffic to your website, where you can get people who are interested in your adult family home and creating a waiting list for people. So if you ever have an empty bed, you can call the people on your waiting list, and hopefully one of those people are ready to move into your adult family home. So we're still not going to have any professional services for month 5. All the rest of the figures amount are pretty good. Now we are down to staff. Okay. We now have 6 residents, and we only have one full-time caregiver, but that's one caregiver that only works during the week, let's say. So let's say we want to have additional caregivers so that we are able to have more personal free time. We always want to have 2 people on staff at any one time. So we're going to need to start to hire more caregivers. So if we just figure that each caregiver full-time is $3,500, and we go ahead and say in month 5, we're going to go ahead and hire 2 additional care providers, one full-time and one half-time. All right. So a full-time care provider is going to be $3,500. So we add 3,500 times 2, that's 7,000. And then we take the 3,500 and we divide that in half, which is 1,750. So we're going to go ahead and add that to the $7,000. So that'll bring us up to $8,750 for 2.5 care providers per month. So again, we want to have 30% of the amount that we pay. We figured out the formula for that 30% back here. So we can just take that and do the exact same thing. We highlight all the rest through the end of the year and we do Control plus R. So our fixed expense, or our overhead for the staff, increases to $2,625. So now to have 2.5 caregivers, we end up paying $11,375 per month. All right, which seems like a lot, but for peace of mind and care, it's pretty good. All right. So now we go down to business taxes. We have a full house. We are bringing out and we're making more money because our total expenses are 19,850 and our income is 37. So we know we're going to be making quite a bit of money. So let's go ahead and start putting more money in the taxes. So I'm going to go ahead and put $1,000 in taxes. So our total expenses for month 5 is $20,850. We subtract that from $55,614, which is our cash available at the beginning of month 5, leaving us cash available at the end of $34,764. So now we're going to be able to start paying ourselves a good amount of money. So I figure that I'm going to go ahead and take $9,000 out for ourselves. That is the owner's draw against our profit. So we take 9,000 from the $34,764, leaving us ending cash of $25,764. Ending cash of month 5 is the beginning cash of month 6. So we add the full amount of income received, leaving us $62,909. So everything stays the same pretty much through this. Now we can just go down to staff wages. So we have 2.5 people. So let's go ahead and hire one additional care provider. That way we have 3.5. That'll cover during the day. That'll do some coverage over the night so that we can take care of the residents at night. And then it'll also cover the weekend. So we add $3,500 to the 87 or 8,750, which leaves 12,250 in staff expenses or staff wages. Our staff overhead increases to $36.75. All right. We go ahead and just continue to put $1,000 a month into the savings account number 3 for taxes. We keep our 3.5 caregivers for the rest of the year. So what that does is at the end of month 6, our expenses are $25,700. We subtract that from the $62,909, leaving us with $37,209 at the end of month 6. We're going to go ahead and take another $9,000 in out for owner's draw, and we'll just continue to take $9,000 out for the rest of the year. And so our ending cash in month 6 is $28,209. Beginning cash in month 7 is $28,209. We add the $37,145, giving us $65,354. All right. So all of our expenses have been filled in. We have $9,000 per month in owner's draw. So now we know what we are bringing in for the month, okay? So our total income for the first year is $354,000 $798. We borrowed $50,000 to start the business. And so our total amount that we added to the business is $404,796. Our expenses, okay, we don't necessarily need to know how much our expenses are for each line item, other than the fact that we may want to just have that information. So if you highlight that and do Control D for down, that will give us our total for each month. So we've spent on food $18,300, $6,000 in marketing over the course of the year. That's that same amount as if we were to do one resident through a placement agency. $7,200 for liability insurance. That leaves us $3,600 to pay the next year's, and then all the rest of these add up. What we want to look at is that year we paid $98,000 out in salary, with $29,400 that we set aside to pay the overhead of the caregivers. We paid ourselves $80,000 for the first year, or really only for the first 8 months, because we didn't pay ourselves the first 2 months. And our total expenses, grand total is $281,000. So if you look, what that says is we made about $80,000 that we paid ourselves in an owner's draw, which is an owner's draw against profits. So that means that our profits would be the $43,778 for the ending cash at month 12, plus the amount of money that we paid ourselves. So we would have profited $123,778 with this example. All right. Remember, a lot of these expenses are tax deductible and things like that. So it shows that we did pretty well. Okay. All right. That is how we do the cash flow projection.